everyone, welcome back to the Sea of Startups. And I'm Kim.
And I am Kevin. What a year it has been.
You know that feeling when you're building something and your head's down months, in our context, maybe not years, months, and then you look up and realize the entire landscape, well, kind of shifted in a way with Lovable and all that. This year, especially, vibe coding is the big thing for me and how AI has moved. And that's where we are right now in Southeast Asia's startup ecosystem.
We're at a tipping point right now within the startup ecosystem. The transition that AI is bringing. It's been a rough year for the Southeast Asia ecosystem overall. But it's interesting to just be watching it unfold in real time.
Yeah, the seas were rough. South China Sea was rough. I had to.
Choppy seas, the choppy sea of startup.
Seas. Yep, too much of chicken chop in some ways called chop chop. Anyways. so from so we are just doing a small little round out before we break for the holidays. A bit of a full circle moment that connects the dots on some stuff that we've been talking about this season. Yeah, so from our conversations with founders navigating cross-border execution to some parts of our conversations of climate tech builders operating in capital-intensive environments to that persistent question of every late-stage founder that asks, where do we actually exit?
One of the things, there's been a long-standing aim of the Singapore Stock Exchange and by the Singapore government at large that they've been wanting to try and figure out how can they resolve some of the issues of public market access and being a more viable exit pathway, especially for the startup ecosystem. Recently, news story comes out and the SGX is pairing up with NASDAQ to essentially establish a dual listing bridge, which was a recent announcement that came back. Sounds interesting on the surface. I have a handful of doubts underlying that of what the real effectiveness of it will be, but an interesting story nonetheless. I mean, one of the things that's been haunting the Southeast Asia ecosystem is everyone complains about exit. So here we have something which is a news story, which on the surface seems positive.
And Singapore just did it again, taking the frontier about doing this dual listing within the Southeast Asia market, just as how culturally, like, for example, case in point, Taylor Swift as well dominated Singapore for 5 days. I feel there are some parallels right here. I don't know how I drew that, but anyway, this is just another case in point that Singapore is taking a lead on a lot of things. This is one of them. So Kevin got the news, and then I started digging. And what I found was that this wasn't happening in isolation. There's this whole other constellation of things going around that, Singapore being Singapore, there's a Fintech funding reset, which we will dive into later. Again, Singapore takes the lead. No beef right there. EQDP, sovereign capital repositioning, all moving in the same direction. So we decided to connect the dots. I found Kevin found the news and Kim found the patterns. And what emerged is this story about how Singapore is basically building its own version of Silicon Valley's capital stack, but for Southeast Asia, and it's happening right now.
Yeah, so shall we dive in and start talking about the specifics in regards to what's going on with this deal? Let's start with that headline.
Let's get into it. Yep.
It basically kind of flew under the radar. SGX and NASDAQ essentially announced that they're creating this dual listing bridge, as I was saying earlier. And while that sounds cool, it is geared towards larger size companies.
Okay.
So it's really only geared. You have to have a $2.5 billion market cap in order for this to even be applicable to you.
Yep.
So it's not talking about like these smaller listings or these sort of things. It's really geared at somewhat larger size companies to begin with. So first off, size quantum, you have to be on the bigger side of it. But it does solve some serious concerns, because let's talk about some of the pain points to begin with and see whether or not the context of this actually makes sense. Because if you look at most of the Southeast Asian companies that have gone on for listings in NASDAQ in the past, some of them have actually done dual listings, which we can talk about what they had to do in order to do that. But the challenge of going public in NASDAQ is you're on the complete opposite side of the planet, and you have to get people to care. You have to get people to pay attention. And while it may end up seeming straightforward of like a great business should automatically get it, it doesn't actually. Because while we may end up saying, efficient markets, it's not really the reality. What you need is you need to get a lot of analyst coverage. You need to get enough visibility, and you need to get enough of a buzz that people will actually pay attention, analyze it, and make a market. So what happens is you have to look at the level of liquidity. How active of a trading market is there for the shares of the company that are listed? Because if it's thinly traded, you're going to end up getting wiped out, basically. You're not going to have liquidity for your investors. You're not going to end up getting good pricing. The moment that you try and put a block up for sale, essentially it's going to end up getting wiped out. But in the local market back here in Southeast Asia, if you're a Southeast Asia company that is worth, say, 3 billion, 5 billion, somewhere slightly above that threshold, you've probably got local brand. People know about you. It's hard to be that size in this regional environment and people not know about you. So is a dual listing going to end up capturing that? Well, on the NASDAQ side, probably not. But on the SGX side, are the people that would be trading there are going to end up trading. But like, now let's flip it. Like, what's the difference? If I just do a straight listing on SGX, is that, and I'm expecting that it's going to be the same trading. Is that much of a difference? That those local traders would not trade me if I was not dually listed? And the flip side of it, by having that dual listing, is that going to make any impact on the analyst coverage, the liquidity on the NASDAQ side? So I think it's cool that this is being established because it does solve some pain points. You're solving the legal and regulatory burden, because it is a giant pain in the backside to go through two separate processes, two completely different, complicated registration, like filing for an IPO and getting the whole like process. Lawyers make a killing, accountants make a killing, and the founders and the operators of the business just want to kill themselves by the time it's done. It's not a fun thing to go through. It's a big achievement. Don't get me wrong, but it's painstaking, and it occupies a lot of time. So it does solve the problem of having to do duplicate effort. My question on this, and my hesitation on whether or not this is really the silver bullet that we're hoping for in regards to solving this public market aspect, is liquidity and analyst coverage on the NASDAQ side. And does this actually encourage traders on the regional side to actually make movements as more so than they would if it was just directly solely linked here?
It sounds to me like it's being, at least in the SGX, it's like a big fish in a small pond. And when it comes to NASDAQ, it's like small fish in big ponds, whereby it gets overshadowed. Face it, right? Like in the States, the companies are much, much bigger there. Liquidity markets are more fluid in that sense. Here, it's still pretty slow. So I think this SGX dual listing, the way I'm hearing it, is that it benefits more of Singaporean local C companies more than anything else than the States, really, because it gets them exposure to the States. But then again, as to how fast it moves, I think it would easily get overshadowed by the bigger companies on a NASDAQ listing. Like
I mean,
Grab
that's
chose
that's
NASDAQ,
that's kind of the
right?
point. Who's paying
Yeah,
attention on the NASDAQ side?
yeah.
Like, are you going to
Like,
get analysts paying attention? So is the dual listing just for like ego, or is it actually going to end up really
ooh,
solving something from a trading side?
yeah,
Is it really creating an additional liquidity that could not have been accomplished otherwise? So don't get me wrong. I'm a fan of this.
yeah,
I'm just hesitant because it's uncertain of whether or not it's going to have
yeah. An
meaningful
impact.
impact on
Yeah,
this. I like
yeah,
the marketing buzz that this creates because it
yeah,
shows validity into these markets, and no
yeah,
market in Southeast Asia could have done it other than Singapore.
yeah. So, for example, Grab chose NASDAQ, C chose NYSE, and for years the message was clear. If you want to be taken seriously as a tech company, you don't list it in Singapore. So that's one of it. So does it then put SGX on a higher level? Like you said, ego, because it's like it kind of elevates your position to international basis whereby more companies would want to be listed on SGX. Again, it gives more exposure to C companies to come on to at least perform better than their counterparts and to be listed on the dual listing. On the flip side is, where do they stand once they get listed on NASDAQ? Like, do they
Yeah,
get uh what do you call that, dissipate into the oblivion in NASDAQ listing in the States?
yeah.
Or, because they are calling this a landmark collaboration, right? That gives Asian growth companies quote unquote harmonized pathway to tap both US and Asian capital markets simultaneously. So the keyword was simultaneously. And then this connects directly to something we've been exploring all season, some points to our conversation with Chi about cross-border execution and trust.
Mm.
So one of the key points was that the best regional companies don't try to be American companies operating in Asia. They build with a fundamentally regional DNA while maintaining global standards. So maybe the flip side of it in terms of the pros that is that this dual listing framework is literally the capital markets version of that philosophy. You're not abandoning your Asian identity to access US capital. You are literally bridging both worlds.
Which is fair. It's just a matter
Yeah.
of like who is actually providing the trading volume,
Yeah. That
right?
remains to be seen. Yeah.
Because like that it again comes down to somebody has to care enough in order to be
Yeah.
to bother making a market and trading your shares.
Yeah.
And is there going to be enough of a market there?
Yeah.
And so that therein lies the challenge. I think this is mostly pure upside on the SGX side because they get to
Yeah.
go around to all these startups in the region and say, "Hey, we're paired up with NASDAQ. Just do the
Yeah.
listing here, and you'll automatically be there."
Yeah.
And we're a short flight away. So if you need to talk to lawyers or anything on a regular basis, hey, we're right next to you.
Yeah.
Just come on over. It's perfectly fine. So
Yeah.
pure upside for them. But on the Singapore side as well, like who are the market participants? Who accounts for the
Exactly.
majority of the trading volume on that exchange?
Yeah.
Public institutions and extremely conservative institutions.
Yep.
And so, I mean, there's a reason why there hasn't historically been a lot of technology companies on these exchanges. So we're not really solving the primary roadblock in
Yeah.
regards to public markets being an exit pathway for technology startups.
Yeah.
It's a step in the right direction, don't get me wrong. So I don't want to be full neg on this, but I'm not 100% convinced that it's actually tackling the core issues.
I don't disagree. But then there was this company that's called AVEpoint. They just participated in the dual listing back in September 2025, just a couple months ago. It was the first company to dual list on both exchanges, and it showed that there was real issuer appetite and a working template of for more formalized switch. Looking at a time frame, that could be the catalyst of how this all came about, right?
Yeah.
Um like the exact timing and packaging caught people off guard, but the direction of travel, closer linkage to US markets, and a more credible dual listing path could be building for years, and I'm not surprised that they did it. So again, see, Singapore, just like I
Yeah.
said, they did it
I
again.
mean, what are the things, and I haven't had enough time to study the entirety of the ins and outs of this, but like, and
Yeah.
I may be wrong in get what I'm getting ready to say, but historically, if you're in the US, you usually had what's called American Depository Receipts, which is essentially a share of a foreign share, let's call it.
Okay.
And these are basically like, think of it as like an escrow account, this sort of thing. It's like it's
Right.
intended to replicate. And that
Okay.
this is the way historically that you could end up having your shares traded on the US exchange while listed elsewhere. This kind of changes the scope of that because it changes the reconciling mechanisms, from my understanding, to where it
Mm.
actually ends up it making a pretty substantial leap forward in regards to how the functioning of
Mm-hmm.
price setting. So you do have potential benefits of being able to trade in Asian markets during Asian hours.
Okay.
When the US market opens, you have immediate reconciliation with those trading prices to where
Yeah.
you have a little bit more dynamism in
Yeah.
the way that the price setting ends up happening. I'm
Yeah.
curious of how the two-way street of that pricing ends up going, if the liquidity falls off, or how would it end up being. But nonetheless, is it a step
Yeah.
in the right direction? Absolutely. Are there potential flaws that'll come out? Sure. But is it worth trying to make the effort and then fixing it on the
Mm.
fly, just because this is kind of the first of its kind? We've had history of companies doing dual listings, but doing the more rigid process of independent filings in each location. I'm in the kind of let's wait and see how this falls out.
Yeah.
I have some concerns. I'm not necessarily convinced this is panacea for it. There's some benefit of Singapore government backing, etc., etc. I love the aspect of limiting the amount of bureaucratic red tape, filing, lawyer fees, audit fees, all of this nonsense that goes into public listings, because it's a giant pain in the backside in order to go through it.
Mm-hmm.
We'll see whether or not it actually truly creates a positive impact on liquidity for a startup ecosystem.
That's definitely one way to look at it. And I mean, it only starts next year, right? So there's still time for them to hash things out or to smoothen the edges and whatnot. So I agree with
Mm.
you. I'm pretty much on a wait and see approach, because again, you talk about cost versus benefit analysis, whereby how much of an impact you are providing when you're listed, or how much of an impact it is for the Singapore company or the C company to
Mm-hmm.
be listed on NASDAQ. I mean, it's 2025. All these things should be hashed out in terms of the paperwork and all that. It should already be done with. But I mean, when it comes to financials, there is some amount of due diligence that is needed to be done, because we don't want to have that Silicon Valley Bank crisis again, or that subprime financial crisis again. So there still needs to be some um, prudent steps to be taken before everything comes into play. I also want to highlight, like, there's a Valley parallel as well. Like when
Mm.
Silicon Valley startups scale, they assume a NASDAQ outcome. So it's not even a question, like it's just the default path. Build, scale, IPO on NASDAQ, get acquired, or stay private with secondary liquidity. The infrastructure is pretty much there. And in some ways, maybe Singapore is looking at that direction as well, to be the Silicon Valley of Southeast Asia, because C hasn't had that until now. I mean, this dual listing changes things, right? Like Singapore is positioning itself as a public market on ramp for the region's best growth companies. And if you're a VC writing Series B or Series C, this change your exit narrative. You can finally tell founders we can take you to global capital without forcing you to leave the region, because typically it's either you have to be in Singapore or be in Delaware to get on NASDAQ, right? And yeah, I guess with AvePoint, uh it's more of a template that other growth stage tech firms are watching this closely. If you're a founder, start thinking about Singapore and NASDAQ as a combined listing strategy, not a far off fantasy. Finally, something is coming to light, especially in a fintech, B2B SaaS, or infrastructure place where you're building a region but need access to deeper capital pools. If a VC, your portfolio construction may just get more interesting. Late stage companies that were previously too regional for a US exit now have a viable dual path. And again, as an investor, that changes how you underwrite follow-on rounds. Which brings us to our next shift. And I think this is where things get a bit more interesting, which is related to Singapore in some ways being the region's fintech hub. So the quick question is, when you see a headline like Southeast Asia fintech funding down 39% year on year, what's your first reaction?
So I would start worrying
Yeah.
if I'm seeing the collapse. Yeah.
Given where Singapore is right now, it's a regional tech hub, fintech hub as well, right? So, I first saw the transaction data, and then the headline is technically true and a bit, I wouldn't say completely misleading at the same time, because fintech funding isn't dying in Southeast Asia. It's pretty much being concentrated in one pool. And no surprise who's the winner. And the concentration game in a way that's a bit cool, because let me give you the numbers. Because Southeast Asia fintech startups raised about 829 million in the first 9 months of 2025. Basically, a baby who was born out of it. It's got, okay, I don't know how that related, but anyway, it's down 39% year on year. Yes, but here's what the headline doesn't tell you. Singapore captured about 84% of that funding. Singapore Business Review puts it as high as 88% for certain periods. It's pretty high. It's an Asian A, by the way.
That's pretty high. I mean, there's a little bit of nuance to it, because like everyone has their hold co or top co, depending on which phrasing you prefer, in Singapore. So when we see these funding rounds, a lot of it ends up capturing where the top entity that's receiving the funding is. But it is quite telling nonetheless, just because like it's a very large percentage that is getting swallowed up by a single country out of the region. That just so happens to be the smallest country.
Yes, I was just going to say that.
Region. But it's hard to separate the noise out of it, because we don't know how much of that percent is actually just companies that have no base of operations in Singapore and are just raising in Singapore.
Yeah. And in some ways, it does tell us that the capital hasn't really disappeared. It's just become really selective. For example, the mega rounds are still happening. Thunes raised about 150 million Series D. Air Wallets raised about 150 million Series F. And if you're seed stage in Manila or early stage in Jakarta, good luck. Again, it returns to how Singapore is as a nation. It's built so much on the black and white basis, whereby even now, moving forward, with tech that has always been in the play, and given that it's elevating its ranks in terms of being not only the financial hub, but being the fintech hub again in the region. Yeah. And this is exactly what we've been talking about all season. In our climate tech episode, we discussed about how capital intensive businesses need access to patient long-term capital. This is one of it.
It's a tough fundraising environment overall. I mean, the ecosystem in Southeast Asia has been collapsing. Most of that has been collapsing as the bubble in Indonesia has popped. Certainly, if you're there, it's going to be a very challenging time. There's a little bit of a flight to safety, legal jurisdiction, etc. Singapore has been able to hold on. That's part of the reason why you see the larger percent share, just because even though some of the other countries may not end up collapsing, it's that a lot of the stuff that was going on in Indonesia just kind of disappeared, and we ended up getting a little bit of a shift in regards to that. Ecosystem has to go through a reset, though. So while we're going through a tough time right now, we are going to end up coming out of it quite different. Singapore inevitably is going to end up holding that center role. It is the capital center. It is basically the capital of the region. I think a lot of people would end up getting upset with me for saying that, but it is kind of from that perspective. And so inevitably there is a concentration of talent, there's a concentration of capital. Like it's the center of gravity. Like you can dislike that San Francisco is the center of startups in the US, but Austin's pretty cool, Denver's pretty cool, New York, Boston, Miami, there's tons of other places. You go talk about other places, you could talk about like Bangalore in India, but you also have a lot of startup ecosystem going on in Delhi. You've got a startup ecosystem going on in Mumbai. We could say the same thing about China. So yeah, it's an interesting dynamic that's going on in the region. The dominance of Singapore, inevitably, I think it's messy data, partially because of the holdco slash topco of these startups that are raising. Most of the companies that I invest in are actually legally domiciled in Singapore, and we're doing seed stage. So like, are those getting captured in the Singapore data? Probably.
Yeah, I'm pretty sure they want it all to a certain extent. I'm not going to be surprised. I think even then, like there is some geopolitical dimension here too, right? Like we won't go into deep because that's a whole other episode. But this does tie into that Financial Times piece that I read some time ago. Like, can China win the innovation race? Because one of the core tensions in this article was that China has scale, capital, and ambition, but is increasingly isolated from global capital flows and talent networks. And on top of that, the US-China tech decoupling is creating this vacuum as well. And then Singapore specifically is positioning itself as the answer to that tension: open, connected, neutral, but with enough skill and ambition to matter. I mean, I'm not against Singapore, but I'm just saying that Singapore is smart to be able to leverage on whatever that's happening right now to its advantage. Because you're seeing biotech investments shift from China into Singapore, and according to Bain's APAC Biotech report, although China still dominates 75% of regional biotech flow since 2019, the trade war, the tensions are diversifying capital into Singapore and South Korea. And given Singapore being a structurally strong country, political neutrality, strong IP protection, legal transparency, regulatory alignment, the government's 28 billion Sing SGD Research Innovation Enterprise 2025 plan supports deep tech and biomedical advancement. There you go. So Flagship Pioneering set up a regional hub with A-Star and co-committed $100 million to advance biotech and health tech innovation in APAC. See, Singapore is doing so much. She's doing so much. Yeah.
Yeah, 100%. 100%.
Flabbergasted by the numbers already? I guess so. I'm just gonna leave it as that. I'm not gonna talk too much about Singapore now, but if you are a fintech founder outside Singapore, you need a Singapore strategy. Not someday when we hit Series B. You gotta do it now. Like entity structure and all that, whatever that you need to set up, start building that foundation early, because by the time you need to raise a serious round, it might be a bit too late to retrofit. And if you're a seed stage investor, your job just got harder. You need to identify about 10 to 15% of companies that will make it to late stage and help them build towards Singapore from day one, and that's tough. Moving on to the last one. It's a question that I've been a bit, not obsessed, but curious more of. What does it actually take for a regional ecosystem to go from emerging to mature? Man, 10 o'clock doesn't do you well.
Yeah. Sorry. I'm jumping all over. From emerging to mature, we basically need to complete the capital stack, which means having capital at each layer, from seed to Series A, all the way through the growth stages, pre-IPO, and then having exit pathways and actual realizations happening, which is the public markets. Hopefully this dual listing actually makes an impact of it, to be determined. But we also have M&A activity, which unfortunately is trending down a little bit, but still some positive signs going on there. So where all of this kind of ties together is that we're starting to see more of a positive side. We had this influx of capital. We had this bubble. It came, it burst. We're now reconciling ourselves with some of the indiscretions, some of the challenges of the past. Hopefully some of these moves on adjusting and improving Singapore as an IPO market and the dual listing and some of these other steps. Hopefully all of this makes a move. We need stronger steps so that it acts as a signaling impact, so that international capital starts coming back in and starts filling out the ranks of the rest of the capital stack, which it was starting to do before, but got scared off because of some of the challenges that many other markets had faced as well, but were particularly pronounced in Southeast Asia. So some positive signs, still a long way to go in regards to moving from emerging to mature. We're still in the emerging stage presently.
Zoom out for a second. We've talked about this few shifts about the SGX-NASDAQ dual listing bridge, giving late-stage companies a real exit path. Fintech funding consolidating into Singapore, concentrating power in one hub, and then emerging to mature markets and what it takes to get to mature markets. So when you put those three pieces together, you get something that looks a lot, in a way, like Silicon Valley's Playbook, adapted for Southeast Asia. For years, we've been asking, can Southeast Asia produce the next Google, the next Facebook? I think we've been asking the wrong question, because the right question could potentially be, can Southeast Asia build the systems that reliably produce category-defining companies? And I think maybe...
So to anyone listening, if you're building something right now, whether you're pre-seed, seed, Series A, staring down the late-stage rounds, just to remember, game is changing, infrastructure is improving, the capital stack is improving, the market is improving. All we need is you.
Ooh, that's motivating. So that's one way to wrap it up. So your job, to add it in more, your job is to build something real, something durable, something that solves a problem people actually have. And then Kim and Kevin can come out and talk about it. You give us a purpose to talk about it.
Yeah. Let these talking heads do what we're trying to do here. Like, you guys go out and do the work. We'll sit behind mics and start talking about it. How about that?
Yeah, I mean, think about it. Think about the opportunities: biotech migrating from China, space infrastructure, ground stations, climate tech, AI compute. These are all pretty big, 100 billion plus opportunities for the region. So think about it. Start doing the work. It's a game changer. And just remember, while you're working hard, you kind of need to be in touch with the region as well. So keep listening to us. Keep listening to the talk heads talking about you. And if you enjoyed this episode, share with a founder who needs to hear it. Leave us a review. Tell your friends. We are on all the podcast platforms: Spotify, Apple Podcasts, whatever you name it. Just it's the sea, we are in the sea. Listen to the sea. Chop chop.
The sea of startups. Exactly. Likes, you're sharing, all of that. Pass it on to another founder that you know of. All of this helps us just bring more episodes out to you. Smash that like button wherever you are. Add a comment. It helps the algorithms. Do what you can. We'll bring you more episodes in the coming year. And have a good wind up. Hopefully everyone keeps on grinding, or at least get some reset to the mental space.
Gotta take a break too, can't always be going on.
Exactly. The calm before the storm of 26 in the sea of startups.
Exactly. And just one more thing, gotta stay curious, ambitious, and keep building. And last one, To keep in touch, head over to our Substack at the seaofstartups.substack.com to get all the full transcripts, show notes, and all the citations. Just to stay afloat, to keep on going. That's where we are at. So we got to wrap up, and Merry Christmas and have a Happy New Year.